What we are going to be talking about is loans that are held by financial institutions. These are loans that are not backed by the government. You will have to apply for these loans through a financial institution who will be funding the loan. When we talk about that, you're not applying through any government website, not through the state and not through the university. You're going directly to your financial institution that you're considering using. When we talk about private student loans, these are loans that are going to help you with those education expenses that are not covered by your savings, scholarships, federal loans, or grants. We really want to encourage people to exhaust all of those options before searching out private student loans. So if you haven't filled out your FAFSA information, or you haven't looked into student loans through the federal government or grants or scholarships or whatever it might be, we do encourage you to look at those first, just because they're structured a little bit differently. And Stephanie's going to cover those a little bit later in our presentation. So who are private loans for? Private loans can pretty much cover anybody who is attending a university. It can be for people who are postgraduate. So for example, if you went to law school and you're studying for the bar exam, there are loans that will cover certain areas of that. Tonight, I'm going to focus on undergraduate students and career training opportunities for students, which would be a trade school. So when we talk about undergraduate students, students who are attending a school with the intent to earn their associate's degree, their bachelor's degree, or a certificate in trade. So it will cover trade schools. There are some stipulations in regard to the amount you're borrowing, which we'll touch on. This is also, private loans are also for parents of students. So if you are a legal parent or guardian of student and you would like to assist them with that cost of their higher education, these type of loans are going to be for you, especially if you do not qualify for certain financial aid areas or federal loans. We also do student loans for graduate students who are looking for their master's, getting a medical degree, dental, law school, any kind of MBA, doctoral degrees. Like I said before, I'm going to focus more on undergraduate students this evening, as well as the parents of the students and what they're looking to cover in addition to those federal loans that they might be eligible for. When we talk about private student loans, some of the benefits of having a private student loan, again, exhaust those other options first, but you can choose from multiple repayment options. They will not be the same repayment options as a federal loan, but there are going to be options for you. We also have competitive interest rates. So financial institutions may, be competing to get your loan. So you might have multiple choices on what those rates are going to be. Most likely you're going to have an option also of a fixed and a variable rate. Private student loans, you usually can borrow about 100% of your student expenses, and they have to be the certified expenses. So they need to be things like tuition, fees, books, housing, meals, travel. Sometimes it will even cover technology. It depends on what institution you're going to and what institution qualifies as a certified expense. So for example, if you are required to have a laptop for your education, that can be covered under your student loan. If you are living at school and your meals are part of your housing, all of those things, as long as those are things that you're paying to the school, can be covered by the student loan. So when we're talking about student loans specific to Sallie Mae, just because LOC works with them, you won't pay an origination fee or prepayment penalty. We'll go into a little bit more detail about the prepayment penalty area. You'll also get, again, specific with Sallie Mae and their partnership with LOC, is you'll get auto debit discounts. Basically, if like any other bill we have these days, if you set up an auto deduction from your checking account or wherever you plan to pay the payment from for your student loans or for your child's student loans, can be a slight discount for you on those loan amounts. Sallie Mae and other financial institutions that we work with also offer a cosigner release. We'll touch on some more details about that. But basically, if your student is not eligible to get the student loan in their name at this time, due to their age, due to their credit history, what have you, there is a point in time later on, once they graduate, where we do offer a cosigner release, and we'll touch on some information about that. Excuse me, sorry. So what are some things you need to do? I apologize. before you apply for your loan. So number one, you want to calculate how much you need for college with the private loan. When we talked about, excuse me, exhausting the savings, the grants, the scholarships, the federal student loans, you need to have a collective amount, because this actually might be asked of you when applying for a private loan, of what those amounts are going to be that you're going to contribute towards either your child's education, or if you're the student, towards your own education. They want to know that you've exhausted all options. It's really in your best benefit to exhaust those other options prior to starting on a private student loan application. So you want to consider whether a cosigner is needed. So if you are a parent here this evening, you are the cosigner. The student is still going to be the primary on the student loan, unless you are the actual student as the parent. So you're the one going to school, you're still the cosigner. The student has to be on this student loan. There's no way we can get around that. Students without a strong credit history or no credit score, or they don't have a job or financial income, 99% of the time probably are not going to get approved without a parent cosigner. So keep that in mind. If you're a student who's looking for student loans, I'm not saying you can't get approved, but your interest payments are going to be much, much higher, and your terms aren't going to be as flexible. You also want to consider, if you are the student and the parent, having a discussion about what career your student is aiming to achieve post-graduation. That way you know if the salary is going to be able to cover that student loan. So if you're a parent who plans on paying the student loan off for your child, totally fine. That might not come into play. Also consider what's going to be happening in 4 to 5 years for your own personal income situation, your career goals as an adult even, and if your child's going to contribute, how much can they contribute post-graduation? And especially if you want them to take on the responsibility of paying off this loan. If parents are paying back or planning to pay for the loan, they do have to qualify for the loan as the person who's going to be making the payments. So if you are a parent who's going to co-sign on the student loan, you are equally responsible, as is your child, to paying these loan payments. So if something goes in default, if something goes in collections, you're equally responsible to your child, whether it's today or 20 years down the road, unless you get a co-signer release. So for example, if you want to apply for a car in 10 years, your child has graduated college, but you never were released from the loan your child is on, and your child's making those payments, but you're still that co-signer, it will impact your credit in the future. When we're talking about applying for the loans, again, before you apply, make a plan, but make sure you apply at least 2 months before the start of the academic year. I would even suggest a little bit more. That way, you know you get an approval. If anything happens to have a hiccup, for example, they can't verify some piece of information for whatever reason it might be, you want a little bit of a grace period. It's not like a car loan where we're going to issue you the cash immediately. It's going to be issued upon when the tuition is due to that university. So what do you need to have available with you prior to applying for a loan? This goes for whether you are applying, we don't really do paper applications anymore, 99% of them, unless you'd like to walk into a building and have somebody else type it into the computer for you, you're going to type this into a computer. So you would click the link to apply. You will need your permanent address. No PO boxes are going to be accepted. It has to be a permanent address. And it also has to be where you currently live. If you have lived there less than a year, we're going to ask for your previous addresses. For example, if you lived in an apartment and then you moved a year later, let's say you did that twice in the last 3 years, we're actually going to ask for your 2 most previous addresses. So you're going to provide us with 3 addresses altogether, if that seems to be the case for you. We will need social security numbers for the borrower, cosigner, and students. So when we talk about borrower, cosigner, and student, we're basically saying if the student's the borrower, we're going to need their information. If you're going to have 2 cosigners, which you don't really need, as long as both parents, depend on the parental situation, you only need 1 adult to be on the student loan. So if you are married, you and your spouse don't have to be on your student's loan, but you will still, it will still impact your joint credit report, just as a heads up. The school information. So if your child has not decided what school they're going to, you cannot apply for a private student loan. You have to know what school they're going to go to, what their enrollment status is, it is helpful if you know the degree and course of study ahead of time. If they're undecided in their freshman year, probably won't be as big a deal, but if you've already applied for a student loan in the past and you're applying for another, they're going to want that information so they know how far out you're going to be going. They'll also want the academic period of the enrollment and the year you're going to be in school. So, for example, if I am a junior in high school, I cannot apply 2 years down the road. I don't get that money ahead of time. You have to be within that academic year in order to apply for the private loan. The loan amount requested and other financial aid that you expect to receive or your student expects to receive, you have to have that information handy. So that means you have already applied for your federal loans. You've already been informed about what grant money or scholarships you might be getting. They will request that information and they will ask for verifying documents at times so that they can see how much is actually being covered. A side note about the school information, certain institutions don't work with every university. So when you go to that application page, it's going to ask you for a school and it's going to have a drop down. It's going to ask you for the state as well as what school, and you just start typing in the school. If no school pops up, there should be a button anyways that says your school wasn't listed, and then it'll walk you through prompts on how to find it or whether or not that school qualifies for a private student loan. If you are an adult or if you are a student looking to apply by yourself, you will need employment information. You're going to need your company name as well as your gross income. And to follow up on that, with the financial information, that they might ask you for your W-2s, they might ask you for your last 2 pay stubs because they are looking for a year-to-date income for your household. If you do need 2 adults to be on it in order to be approved, let's say you have 2 parents who might earn lower income and they need to apply for a private student loan, it might be beneficial to apply together. Additionally, when we are talking about a parent applying with a student, let's say you're a divorce situation, the divorced person does not matter in our scenario for a private loan. In the circumstance of if I am divorced and my ex-spouse is contributing in their own way, that's totally separate, but that will still count towards, let's say they did the federal loan with your child. That part still counts, but let's say they have savings that they're contributing. That's not part of your financial information, but the address to where your child lives does have to match yours if you're applying with them. They have to be a resident of your household. So the financial information, like I said, it might be bank accounts, it might be proof of income like pay stubs or W-2s. They even will likely ask you for a monthly mortgage or rent payments. They will probably not ask you for verifying documents because when you do apply for a private student loan, just like any other loan, we are going to pull your credit. So we're going to see basically any outstanding financials that you have in good standing or bad. So what's considered when we're reviewing a student loan? We consider the income of all individuals applying. So for example, if I have an income and I have a child who is the person I'm trying to fund college for, let's say they have a fairly good job while they're going to go to school, we can use their income. It is helpful, but is not necessary. So it can be entirely based on a parent's income. The student doesn't have to have the income if they're applying with you. We're going to look at your credit score and history. If you have a lower credit score, we're obviously going to give you a higher interest rate if you're approved. But all of that is considered. If your child does have a credit score and a small credit history, we still will look at that. The cosigner is usually the one who we are going to take their credit score, and that's what your interest rate is going to be based on. We will look at your debt to income ratio, basically how much debt you have to how much income you earn. Certain institutions have stipulations on what percentage they're willing to lend above. Most are around 30%. So if you have 30% debt already, student loans are a bit of a gray area. They still might give you additional debt and grant your loan, but just keep in mind, if you have a high debt to income ratio, it might hurt your chances for being approved. We will also look at citizenship, whether or not you can apply for a student loan with a work visa. If you plan on going to an overseas school and you would like a student loan, you can have a student loan for an overseas school, but you have to be an American citizen in order to get that loan under certain circumstances. We'll look at your length of employment. If you have short-term employment in the sense of you've only worked for a company for a couple months, we will probably ask you for your previous employer's information, and we won't ask you why you left that previous employer. We'll just want to see what your income was previously. They may also ask, in addition, a letter from your current employer if your length of employment is very short, just to verify what your monthly income is. So like I mentioned before, we're going to ask what school you're attending and whether or not our financial institution, which in the circumstance of the partnership LOC has, that would be Sallie Mae. Does it work with your college or university? And then we're also, again, going to consider what other financial assistance and loans you're receiving for your education. So when we're requesting a loan, or when you're applying for a private student loan, the cost, the amount that we grant you for the student loan cannot exceed the cost of attendance, less your financial aid. So for basic term sense, if only college costs $100 and you got $10 from financial aid, we won't give you more than $90. So in real world terms, the minimum borrowing amount for a student loan with the partnership that LOC has is $1,000. They will fund up to 100%. So if you have no other funding from other locations, they will fund 100%, depending on all those other circumstances that we talked about before, when they're evaluating your loan. There is no guarantee until you apply and they pull all your information. So if you call a financial institution and say, hey, could you tell me, do you think I'm going to get approved? They can never answer that question. They can just ask you to apply, and they can tell you what their rates are and what they judge applications on. So just to give you a little bit of an idea, the current variable rate, so for student loans in this exact moment is 6.37 to 16.7 APR. And again, variable rates are going to change over the time of the loan. That's what you're signing on to when you sign on the variable option. Sometimes that can be to your benefit. A lot of times that's detrimental. So be very careful when you are searching for a student loan. Make sure you ask prior to applying so that it doesn't hurt your credit by applying. It will be a hard hit when you apply for a student loan to your credit report. Fixed rates currently are 4.5 to 15.49 for a fixed rate student loan. Excuse me. The terms on the undergraduate loans that are the most popular, I would say, are about 10 to 15 years. With a private student loan, though, keep in mind it's different than a federal, where it is not, private student loan is not subsidized. So the interest is accumulating as soon as the funds are sent to the school. So if not we LOC, but if Sallie Mae were to send a check to your school on July 30th for tuition, then that interest is starting on July 30th. They may require, the financial institution may require that they send the funds directly to the school. So you might not be issued a check that you then send to them. They might actually require that they issue it to the school directly, depending on what the expenses are. They might actually cut you multiple checks. One would go to the school, one would go to you for those other items, such as the meals, the housing, etc. Something else to keep in mind, a lot of people forget, you do have to apply for a new student loan for each academic year. And sometimes with private loans, I'd say a lot of the time, it is difficult to consolidate. So if you were going for 4 years, you would have 4 separate student loans that you're going to be paying on. When we talk about repayment flexibility and loan forgiveness, so a lot of people have been talking about the loan forgiveness that the government's been talking about. Private loans are not held to the same regulation as federal student loans. So when they talk about, oh, maybe you qualify for loan forgiveness, private student loans do not qualify for that. That is the federal government loans that are up for that loan forgiveness that everybody's talking about. Excuse me. But even though federal loans are required to have that flexibility and income-based repayment options, that doesn't mean that private loans don't have options. They're just not held to the same requirements as a federal loan is. So when we talk about repayment options with a private loan, there are deferred payment options. or repayment options, which means that you can wait until after you graduate to start, or till your student graduates, in order to start paying on those loans. So once graduation happens, there's usually about a 30 to 60 day window, sometimes longer, depending on the institution, where you don't have to start paying till then. Keep in mind that interest has been accumulating for the last, if again, it's a 4-year degree that your child or you are going for, that interest has been accumulating that whole time. But you don't have to make the payments until you're out of school. There's the fixed repayment amount, where it's basically you pay the second you take out that loan. So we talked about, once we mail the check to the university, that's when interest starts, that's when your payments start. So once we issue the money, you would then have a monthly payment that you would pay back towards the financial institution for that loan. There's also the instant interest repayment option, where you're only paying interest while you're in school, and then post-graduation, you would be paying the remaining interest, if any, and your principal payments until it's paid off. It's just a good way to get a jump on it. That way you don't have larger payments once you graduate, and you have interest-only payments during school. There are no, for LOC, Sallie Mae partnership loans, there are no penalizations for paying off your loans early, but there will be a portion of your loan agreement that specifies that any prepayment amounts are going to go to any unpaid fees or costs, and then any unpaid interest. So if you haven't been doing the interest repayment, or you haven't been doing the fixed repayment, you've had all that interest, they're going to pay off the interest first, and then they're going to put the remaining towards your principal. So something to keep in mind, depending on how you're planning on to pay it off. A lot of times we make the suggestion, if you have large amounts, once the student graduates and they want to set aside that money, like they're living with you and they're going to save their first year income, to pay off those student loans, that type of thing, put it in a bank account, pay it off in a lump sum. That way it's all in one fell swoop, and you don't have to worry about where the money is going at what point. So some things to be aware of before and after you apply for the loan. The loan is going to affect both you as a parent or guardian, and your student's credit score and report. It's going to impact you now and in the future. So like I mentioned, if you go and get a loan in the future and they pull your credit, that's going to be showing up. The loan will appear on your both credit reports until it is paid off. So again, unless there's a cosigner release, which I'll talk about in a second, you're going to see it every single time somebody pulls your credit, or if you look at your own credit report. The loan balance will count towards your debt to income ratio when applying for future financing. Even if that future financing doesn't involve your child, you want to buy a new home, you want to buy a second home, you want to buy a car, it will impact your debt to income. It will also impact your child's debt to income when they go to buy a house as well, or are looking for their first time loans for cars or other type of items. Private loan consolidation is not usually possible. So like I mentioned, you have to get a new student loan every year for every academic year. There's usually not an option to pool all those together, and you can't apply for a student loan for the next 2 years. It's just for the academic year you're in. And make sure you ask before you sign if you think it's something you want to consider when you're talking about consolidation. Most financial institutions are going to have a contact number and just say, hey, is it possible to consolidate? What loans are offered out there that I can do a consolidation plan if I so choose years down the road? So now we want to talk about cosigner releases and how they're an option. So again, for Sallie Mae and the LOC partnership loan, student loan, I should say, there is an option once your student graduates that they can apply to release you as the cosigner. So let's say your deal with them was you were going to get the student loan for them. You're going to help them through school. Maybe you chose that fixed repayment option where you're paying as they go through school, or interest, whatever it might be. You make some sort of deal with them that then once they graduate, you want to be removed from the loan so you can live your financial life and they can live theirs. They must have made at least principal and interest payments on time over a 12-month period post-graduation, and they must meet certain credit requirements set by the lending institution. This is an application, it is not a guarantee. So if they meet all the requirements set by the lending institution, then you might be able to be released as a cosigner, and that loan will no longer affect your financial credit report, history, or debt to income. So a couple other things to remember before I turn it over to Stephanie. The only way, especially with private loans, to get rid of college debt is to pay it off. If your loans weren't subsidized, the interest is adding up while you're in school. It is beneficial to pay that interest along the way. That way, once you're done, all you have to do is pay off that principal and it can happen faster. So we talked about that prepayment penalty. If you've been paying the interest ahead of time all through those 4 years of school or however long you plan to be in an undergraduate program, then you don't have to worry about paying those larger sums each month towards that student loan because they're actually going to your principal. Start paying off student loans as soon as possible. Loan forgiveness does, as I mentioned, does not apply to everyone and does not apply to the private student loans. And always ask about those prepayments. Like I mentioned, I can explain to you what Sally Mae's are, but not every institution is the same. Additional things just to share with your student as well. If their student loan debt is less than the first year of their first income once they graduate and have a career position after graduation, they'd be likely to pay it off in about 10 years. If their debt is more than their first year's income, it might be more like 20. So just a little bit of a fun fact to keep in mind for your students if you are planning to have them help or take over the loan once they graduate. So I am now going to turn this over to Stephanie. And I do see one question. I think somebody asked, yes, there will be a link for the presentation that you can watch a video. So I am going to stop sharing and then I'm going to turn it over to Stephanie and take it away.
Okay, well, Steph, you ended on a fun fact there. If it's more than their first year, it'll take them 20 years to pay it off. So way to go out on a high note, man. As Steph mentioned, my name is Stephanie Petch. I am an assistant director in the Office of Financial Aid at Eastern Michigan University. The information I'm sharing with you tonight does not have anything to do with Eastern. This is general information that I'm going to be sharing with you about federal loans, federal grants, and the state of Michigan funding. I do just want to point out a couple things that Steph went over. She gave you a lot of information. And do we expect you to remember all of this information? Steph doesn't, and neither do I as a school representative. No, we don't expect you to remember everything. So what I would recommend is you take a look once your son or daughter decides on what school they're going to attend, and if you decide to go the private loan option route, that route, take a look at the school's websites. So usually if you go to the financial aid office websites, there's going to be a section about private loans or alternative loans. And a lot of times they'll have links to loans out there that they have approved for students over the last 5 years, or they'll have a portal with a bunch of private loan information with lenders that they have worked with. So, that information will be out there. So I am going to now switch into the federal loan options. All of the information that Steph just shared with you was about private loans. So now we're going to talk federal loans. And there are 3 types of federal loans. We're going to talk about the subsidized direct loan, the unsubsidized direct loan, and the plus direct loan. These are all loans that are, again, through the federal government. And all of these loans, you have to have a FAFSA on file to be considered for. Now, with the private loan, you do not have to have a FAFSA on file. But like as Steph mentioned, it is wise to kind of use all of your options before going the private loan route. So, and maybe once we go through these loans, you'll understand why. So first, we're going to talk about the subsidized loan. Again, there has to be a FAFSA on file to be even considered for this loan. The loan is in the student's name. So the student is responsible for repayment. They have to sign a master promissory note, and they have to do entrance counseling to be considered for this loan. Now, it is a guaranteed loan. So the government isn't running a credit check on the student. If they qualify, because it is a need-based loan, if they qualify, they're going to be eligible and they have to accept it and then go through those proper steps. When I talk about a need-based loan, the calculation for that is the cost of attendance minus the student aid index, which was previously called expected family contribution, which that number comes from the FAFSA. And then if it's a positive number, that equals needs. So let's just say if the cost of attendance is 10,000 and the student aid index from the FAFSA is 5,000, that means you have $5,000 in need that you could get in need-based awards. Now, if you have a scholarship that's $6,000, that means you don't have any room there for a subsidized loan, but you do have room for a loan. So we'll talk about that with the next one. But if you don't have a scholarship, that would mean that you have $5,000 that you could get in need-based aid, and the subsidized loan is a need-based form of financial aid. So if it was 10,000, your SAI is 5,000, you would probably be packaged, or the student would be awarded a subsidized loan. Interest does not accrue on this loan while the student is enrolled in school at least half time. If they fall below half time, which in most schools is 6 credit hours, or they graduate, that's when the repayment would begin. So even if they don't graduate, even if they fall below half time, that's when their grace period starts, and they have a 6-month grace period, and then they start repayment on the loan. The maximum yearly amount that a student can borrow in the subsidized loan for a freshman, because we're only going to talk about freshmen here, is $3,500 for the year. So that's, fall and winter is typically your main academic year. However, some students also attend in the summer. So if they attend in the summer, that would be fall, winter, and summer total for that time period. So remember, it's not an unlimited pot of money. They can only get $3,500 in subsidized loan while they're a freshman. That increases a little bit when they're a sophomore, and then a little bit more when they're junior, senior. So as a sophomore, it goes up to $4,500, and then junior and senior, $5,500 max for the year. The current interest rate, now this is current this year, is a 5.5% interest rate. New rates for the 23-24 year have not been determined yet. And this is all done through the federal government. It's not determined by the schools or anything like that. I do anticipate, just like with everything, I do anticipate that the interest rate will probably increase. And we typically won't find out about the rates until usually like May, June. That's it with the subsidized loan. So subsidized, you have to have a FAFSA on file. It's in the student's name. It's a need-based, maximum $3,500 a year. There is a 6-month grace period after they fall below half-time or graduate. The next one we're going to talk about is the unsubsidized loan. So very similar. They do have to have a FAFSA on file. This is in the student's name. Again, the student is responsible. And this is not a need-based loan. So basically, anyone who files the FAFSA, and it is an approved FAFSA, it's a valid FAFSA, anyone who files the FAFSA is going to at least be eligible for the unsubsidized loan. So if you're a family and you make $300,000, and you want to have your child have some stake in the game, I guess, if that's the right phrase. And you're saying, okay, I want them to borrow a loan, have them be responsible for some sort of their education. I'm not going to foot the bill for them. If your income, even if you have a $300,000 family income, they're going to be eligible for at least unsubsidized loan. So when people say, I'm not going to fill out the FAFSA because I'm not going to qualify for anything, that's a huge, that's false, because no matter who you are, you're always going to qualify for at least an unsubsidized loan when you file the FAFSA. Now, you may not qualify for the free money or the subsidized loan, but you're still going to qualify for something. Basically, the terms of this subsidized loan are almost the same as, the terms of the unsubsidized loan are about the same as the subsidized, except with this one, the interest does accrue while the student is enrolled in school. So when the student fills out their master promissory note, they have an option on the master promissory note that they fill out that says, check this box if you do not want to pay the interest while you're enrolled in school. If they check the box, the interest they will not get the payments for that interest. It will just be put right back into the loan. It's going to be capitalized interest. But if they uncheck the box or don't check the box, they will probably get a bill quarterly for their interest. Now, if that was a mistake and they really don't want to pay the interest, they can always change it. They just have to get with their loan servicer, which is the federal government. Because remember, this is money that they're borrowing from the federal government. So they can always change it if there was some sort of mistake. You can pay off the subsidized and the unsubsidized loans early with no penalty. You can make payments, students can make payments while they're enrolled in school. If you want to make a payment on their account, you can always do that too. Basically, it's online through their studentaid.gov account, but there is no penalty. The maximum amount of an unsubsidized loan depends on if you've gotten anything with the subsidized loan and your grade level. So between this is where it kind of gets confusing, and I don't really want people to be confused with this, but between the subsidized and unsubsidized, the maximum amount that a student can borrow for their freshman year is $5,500. So if they get zero subsidized loan, they can get up to $5,500 in the unsubsidized loan. If they get $3,500 in the subsidized, they can only get $2,000 in the unsub. So between both loans, it's $5,500 max. And I get it. If you've looked at the cost of college lately, you're like $5,500 for a four-year institution or a four-year private institution, public institution. That's just a drop in the bucket. That's true. It's going to cost more than $5,500 to go to a four-year institution, whether it's private or public. But at least it is something to kind of help with the expenses. And these loans, the subsidized and unsubsidized, again, are in the student's name. So they're the ones who are responsible. They don't need a cosigner. They don't need anything like that. So I just wanted to make that clear on those two. This last one that we're going to talk about through the federal government is called a PLUS loan. PLUS in our eyes stands for Parent Loan for Undergraduate Student. So this is the parent that's borrowing this money for the student. So you, the parent, are the borrower. And you will have to put the student information on the loan application. You have to have a FAFSA on file to be considered for the PLUS loan. There is a pre-application process, but the government does what they call a quick credit check. And I cannot say that fast, no matter how hard I try. I can't get that out of my mouth fast. So this quick credit check does not go into as much detail as like what the private loans do. I think basically you put in your social security number, date of birth, they run a credit check on you, and then immediately will tell you whether you've been approved or denied for this PLUS loan. So you'll know right away whether or not you're eligible for this loan once you do the pre-application. If for some reason you are denied the parent loan, and usually the denial would, my guess is that it's a credit score issue. Like maybe your credit score is not very high. And it's usually not an income issue. I don't think that they really, I could be way off base here because I don't do these credit checks for the federal government. They do them. But from what I have heard from students and parents, my best guess is they're looking at your credit score, the parent's credit score, on whether you're going to be approved or denied. I have talked to a lot of parents who apply for a $10,000 loan and they only have $15,000 a year that they make and they get approved because they have a good credit score. They pay their bills. They're not past due on things. So, but anyways, I think mostly they're looking at credit score. So we do see a lot of parents who do get approved for the PLUS loan. What happens when you're approved is notification gets sent to the school that your son or daughter is attending, and we have to verify a couple things on our end, like, hey, is the student enrolled? Yeah. We verify if there's any other additional financial aid that the student is receiving. So the maximum amount that you can pay for is basically the cost of attendance minus any other financial aid. So again, example, if the cost of attendance is $10,000 and you have $8,000 in other loans, grants, scholarships, the maximum amount of a PLUS loan that you, the parent, can actually borrow would be $2,000. So 10,000 minus 8,000 is 2,000. We cannot award you over the cost of attendance. Even if you apply for 5,000 and they approve you for 5,000, it's all based on cost of attendance minus all other financial aid. And then the bottom line is whatever is left is how much we can approve you for. The interest rate currently on PLUS loans, so for our students this year, is 8.05%. Now, this is where it gets kind of tricky because sometimes people see that interest rate and they're like, oh, that's a lot. I agree. This is probably the highest I've ever seen it in, I don't know, I've been in financial aid for 20 years. This is the highest I've seen it probably in 15 years or so. So if you if you can apply, for a private loan with a lower interest rate, that might be a better option for you. But again, this is an option for parents. It's not a requirement for a parent to borrow the PLUS loan for the student. I just want you to also know that it's not a requirement. This is an option. A lot of times we will get parents who are like, well, it's on the award offer, so I have to borrow it. You don't have to borrow it. If you have money saved that you want to put towards the student's bill, that other loans and scholarships and grants doesn't cover, if you want to get put on a payment plan through that university instead of borrowing a PLUS loan, you are more than welcome to do that. But you are not required to borrow a PLUS loan for the student, even if it is on an award offer. And we're required to change the award offers here in the next coming years to make that very clear that it's not a requirement that you do that. But if you do, this is the process. You have to apply. There is a pre-application. It's not a guaranteed approval, but it is a quick credit check. And I think it's basically decided on a credit score. Repayment for the PLUS loan does start 60 days after the loan is fully dispersed. So in terms of real world, if you apply for a PLUS loan for fall and winter semester for your student, the fully dispersed part would happen usually in December or January. So at that point, it would be 60 days after that loan is fully dispersed that repayment would start. You can defer this while your son or daughter is enrolled in school, but interest does still accrue that whole time it's deferred. And you would do this, you would handle all of the deferment issues through your loan servicer, so through the federal government. So all of that is done through the federal government. I think I covered most everything I wanted to. Oh, If you borrow a plus loan and it actually overpays the student's account. So say you borrowed a loan for $5,000 and that's split between fall and winter semester. 2,500 of it comes in for fall, 2,500 comes in for winter. If that 2,500 for fall pays their entire bill, you like overpays it, you have the option when you borrow this loan to have an overpayment either go directly to the student or it can directly come to you. So that's an option when you apply for the loan. Oh, another thing that I didn't put on here is that there is an origination fee when you apply for the plus loan. So the federal government does take out a little percentage of the loan before they even send that money to the university. So when I say you borrow 5,000, splitting it up 2,500 fall, 2,500 winter, it's really going to be like, I don't know, 2,400 that comes in for fall and 2,400 that comes in for winter. It's probably more than that. I just don't know the number right off the top of my head. So just keep that in mind too, that there is a little bit of an origination fee that goes with the plus loan. And actually the sub and unsub. Sorry, Steph, did you have a question?
You're fine. Before you continue, there were a couple of questions in the chat.
Oh, okay.
One question before you move on to grants and stuff, was where do you apply for the subsidized loan? I think there was some confusion about the filing, the FAFSA and stuff.
Oh, okay. Yeah. So with the subsidized, unsubsidized, and plus loan. So with all three of these, you have to file the FAFSA, which I'm going to talk about in that slide right here, the next slide. And you will be offered those loans if you qualify for them. You will be offered those through the school's financial aid office. So this year it's a little bit different because typically the FAFSA is available October 1st for families to fill out. This year, it obviously is not available. They are revamping the FAFSA and it will be available, I'm going to say January 1st, for families to fill out. So you're going to fill out the FAFSA. That information from the FAFSA is going to be sent to all of the colleges that your son or daughter lists on the FAFSA form. And then probably end of February, beginning of March, you're going to start getting financial aid offers sent to your house, your address, to the student. And it will list on those offers everything that the student is eligible for at that institution. So if subsidized is on there, then the student will have to then follow the steps to accept that award and then complete their promissory note and entrance counseling. There will be a lot of information shared with the student once that time comes. The only thing I can say is to encourage your son or daughter to read and check their school email address, like the college email address that they're going to be attending, because that's how schools communicate with them. And if they're unsure or if you're unsure, call the financial aid office and just ask them. That's not a problem for, parents to call and ask about the process or student to call and ask what their next steps are. That happens all the time. So don't, just hope that it resolves itself. Reach out and get help on that. So again, you will be, if you're eligible for those, you will be notified by the school's financial aid office.
And then you had one other question, Steph, that said their question was, if you receive a scholarship money, will you not qualify for the subsidized money? So if they get a scholarship, can they still get subsidized money?
Oh yeah, sure you can. But again, the whole glitch is it goes based on cost of attendance minus the student aid index equals need. So if the cost of attendance is 10,000 and say your student aid index is 0, that means you're eligible for up to $10,000 in need-based financial aid. So if you get a $5,000 scholarship, and say a $2,000 grant, you still would have room for a subsidized loan. So that's kind of the whole. Yes, do students get scholarships, Pell, subsidized loan, Michigan Achievement Scholarship? Yes, they get all of them at the same time. Um, some students do, some students don't. Some students get some of the awards, some only get unsubsidized. So it all matter. It all is going to be based off of the cost of attendance minus the FAFSA information. And then that bottom number is what you're eligible for in need-based financial aid. So there's a whole calculation, and that's why you have to file the FAFSA to be considered for the subsidized, unsubsidized, or the parent loan. So I hope that that makes a little bit more sense. I know it's a confusing process, and I totally don't expect everyone to have it memorized within one shot if this is the first time you're hearing it. But again, I do encourage you to just maybe go out and go to studentaid.gov website. We're going to talk about that. Go to the studentaid.gov website and read information about the loan programs and how financial aid works. And then if you still have questions, you can call any financial aid office and ask your questions. You can call Eastern's financial aid office. Even if you're not planning on attending Eastern, you can call and ask any question about the process, how it works, how, we figure if you're eligible for this loan or that loan. So you just kind of have to reach out. So I hope that helps, and I hope it's not more confusing than what, you're not more confused from when you started this process to now, because that's really not my intent. And, hopefully it helps. I have my email address also on one of the last slides here. You can also email me anytime, and I'll try and help you through the process or explain things in a different way, if I need to. So this whole time I've been talking about the FAFSA is required. So the FAFSA is the one application that you do have to file to be considered for federal student aid. FAFSA stands for Free Application for Federal Student Aid. That's what FAFSA stands for. The way to file the application is you go to studentaid.gov. Now, typically I would say you can do that now. You can go to studentaid.gov and you can look at all of the information, but at this point you cannot file a FAFSA. This year is the new year for the simplified FAFSA, and they are just not ready for it yet. They don't have it up and running, and it's a little bit different. So to sign the FAFSA, the student has to have a studentaid.gov account, and a parent has to have a studentaid.gov account. At least one parent, could be both parents, and I'll tell you a little bit about that. But you can start that process now. Like, you can set up your studentaid.gov accounts now, and then when the FAFSA does become available, you'll already have that account set up so that you can sign the FAFSA immediately. The feds just came out with an announcement that they do anticipate that the FAFSA is going to be available by December 31st, which by law, it has to be available on January 1st. So I'm betting December 31st. Actually, I'm betting January 1st is when they come out with it, but I'm, a pessimist on that aspect. But I don't anticipate that it will be out any earlier than December 31st. If it is, trust me, whatever schools your son or daughter has applied to, whatever high school they attend, there will be notifications and emails going out to senior parents, to students of newly admitted freshmen, that the FAFSA is available. We will be shouting it from the rooftops to let everybody know that, hey, it's available. You can do this now. So, just keep an ear open for those announcements coming out. like I said, it is a new simplified FAFSA. So a couple things that, if you've ever filed a FAFSA before, a couple things have changed. You will be required, as if you filed taxes, you will be required to use the IRS data retrieval. It used to be an option. Now it is a requirement. You don't have an opt-out portion on that. And how this is going to work is the student is going to start the process of the FAFSA, and then they are going to invite you as a parent to complete it. So they're going to put in your email address, and you're going to get an email stating, hey, this process has been started. You need to go out, and we invite you to complete your part now. And then you will go in and you will complete the parent part of the FAFSA. If you, the parent, if you filed taxes married filing jointly, only one parent needs a studentaid.gov account. If you are married and you did married filing separate, both parents will need a studentaid.gov account, because you will both have to release a permission for FAFSA to use your tax information. If you did married filing separate, married filing joint, only one, married filing separate, both parents will need an account. If parents are divorced, the student is going to invite the parent or contributor that contributes the most financially to the student. So that could be the parent that maybe they don't live with. Maybe the student lives with mom, but dad supports the student financially with child support, health insurance. You know, I don't even know what else, but maybe the dad is the one who supports the student financially. That is the parent that the student is supposed to put on the FAFSA. We anticipate a lot of questions with this. What I've been telling students is if your parents are divorced and you don't know which person to invite, stop the process, save it, and talk to your parent. Because once they invite a parent, that can't be taken back. So if they put the wrong parent there, it can't be taken back. It basically has to wait 45 days until the application disappears, and then they have to start the process all over again. So while it's simplified, there are going to be a few little kinks that we're going to have to be able to work through with students and families on that aspect. Again, too, if you're filing the FAFSA and you don't know how to answer something, save it and call a financial aid office and see if we can help you. That was a lot of information in itself, and I still have the grants part to go through. So I'm going to try and give you as much information without keeping you like a lot longer, because I know it's probably been a long day for everyone. So I'm going to move right into grants. Difference between loans and grants is that grants is free money. Grants, everybody wants it. Not everyone's going to be able to receive free money. A lot of people consider grants the only form of financial aid. When they think of financial aid, they think, ooh, I'm not going to qualify for financial aid because I make too much money. What they're really saying is, I'm not going to qualify for any grants because my income is too high. That could be, but that doesn't mean you're not going to qualify for financial aid. For federal grants and for the state funding, you need to have a FAFSA on file. So again, you have to file a FAFSA to be considered for any of these funds that I'm going to talk about. The main purpose of the grants is to basically give lower income families a little bit of a boost to make college affordable for all. Two of the main grant programs that the federal government has, they're called, one is called the Federal Pell Grant, and the other is called the Supplemental Educational Opportunity Grant, or it's also called the SEOG. The Pell Grant, I've got the information based right here. This is the maximum amount that a student can qualify for a year is $7,395. Super easy number to remember. I don't know why the federal government came up with this number. I mean, it has changed over the years. It has increased over the years. So now it's at the point where it's $7,395. Maybe in 2 years it'll be $7,500. Who knows? But the maximum amount right now is $7,395. And to qualify for this, it depends on what your student aid and index is when you file the FAFSA. So if you have a very low student aid index, and I can't give you the numbers right now because I don't know them offhand, but I would say anywhere from 0 to 8,000. It could be more than that. But if your student aid index is low like that, chances are you will qualify for a Pell Grant. Pell Grant does pay based on the number of credit hours enrolled. Full-time enrollment is considered 12 credit hours. So if a student is enrolled 12, 13, 14, 15, 16, the same amount is going to pay whether or not it's 12 or 16. So it pays from anywhere from 1 to 12 credit hours. So it's going to pay, if the student's only enrolled 1 credit hour, they will only get Pell Grant for 1 credit hour of enrollment, which is a change to what it has been for years and years. If you're eligible for a Pell Grant at Eastern, you're going to be eligible for a Pell Grant at Oakland, at Washtenaw Community College, at any trade school. Like if you're eligible for a Pell Grant, you're going to be eligible for a Pell Grant at any institution that you go to. And the reason for that is because they're looking at the student aid index, that SAI. They're looking at that student aid index, and that's always going to be the same regardless of what school you attend. The thing that's going to be different is the cost of attendance. Obviously, it costs more to attend Siena Heights than Western, than Washtenaw. So that's the thing that's going to be the variable, the cost of attendance minus the SAI. And then what you're eligible for need-based aid. So I don't want to confuse it, but not everyone is going to be eligible for Pell. The maximum amount is $7,395, and that's split between fall and winter semester. And it does pay out based on credit hour. The SEOG grant, again, you have to have a FAFSA on file. It is limited funding on SEOG. So a lot of times it's called first come, first serve. So if you file the FAFSA early and you're a high need student, meaning you have a low SAI, you will probably qualify for SEOG. If you file late, meaning if you file in August, which I would consider that late since school usually starts in August or September, the schools could have already used their SEOG funding and you may not get it. SEOG amounts vary by school. So at Eastern, it's $800 for the year, and it could be $1,000 or $500 at Western or Central. So it varies by school, and it's based on how the schools calculate, okay, we typically have this much in SEOG funding, this many students that qualify for it, how much can we award so that we can use the funding the way it's supposed to be used. Again, it is reserved for the neediest families. So basically, if you have a 0 SAI, you're going to be a needy family. You will qualify for the SEOG. A couple other grants that are not very prominent, but I listed them on here. If you qualify for these, what I would encourage is to go to the studentaid.gov website and look up the information. Honestly, like the Iraq and Afghanistan service grant, we have like 20,000 students at Eastern. I think we have 2 students that qualify for that. So it's not a very common one, but it is out there. I just want you to be aware of it. Teach grant, they call it a grant, but it could be something that turns into a loan if the student does not go into teaching. So this is a grant that is reserved specifically for students that are going into teaching, in a high need subject in a low income school district. And the student has to commit to 4 years of teaching within 8 years of graduating college. So they have to certify every year, and they know if they take this grant out, if they apply for this grant and they are awarded, they will know the rules that they have to follow for this grant. But they do have to certify every year, and if they don't, or if they forget, that grant turns into a loan and the interest accrues from the date that they originally got the grant. Not all schools participate in this program. Eastern is one school because we are a big teaching school. So I would guess that if your son or daughter wants to be a teacher and they are going to a school that is known for teaching, they probably participate in this program. Quickly, I want to move to the Michigan aid programs. The biggest one right now is the Michigan Achievement Scholarship, which is also called the MAS. You do have to be enrolled full time. You have to have need, and the amount of this award varies. And I have on here 5,500 to 2,750. I actually think it's 5,500 to 2,000. You can use the MAS if you qualify. You can use it at community college, trade schools, and four-year institutions. There are two parts of this award. One is like a guaranteed award. So like at a four-year public institution, if a student qualifies for MAS, like their first award is $2,500. So if you qualify for MAS, you are getting $2,500. And then you may be eligible for an additional $3,000 depending on what other aid you have already been awarded. So the $3,000 is considered what they call a last dollar award. And this is when it starts getting very confusing on how financial aid is set up and how it's awarded. But I think it's important just to realize that there are two parts to the Michigan Achievement Scholarship. There is a guaranteed award and there is a last dollar award. For more information on the MAS, you can always go to the michigan.gov/mystudentaid website. And they are having webinars for parents that if they want to attend, you can attend. They have information listed out there that you can read on your own. It's just too much for me to go over in the amount of time that we have. But know that it is out there for students. Not everyone, again, is going to qualify. I think right now on the state's website, they say if you have an expected family contribution of 25,000 or less and need, you would qualify for the Michigan Achievement Scholarship. Now, that's with the FAFSA. The FAFSA currently uses what we call expected family contribution. They are changing that to student aid index. And I don't know what the student aid index is going to be for next year's award. So you can go out and you can read the information, and I'm sorry, it's just very vague right now because of this whole new FAFSA. Another award that I want to talk about really quick is the Michigan Tuition Grant. This is an award, again, file a FAFSA by the state deadline. You have to have need, and it can only be used at a private Michigan institution. So you cannot use Michigan Tuition Grant at U of M, Eastern, Western, Central. You would have to use it at like Adrian, Albion, Siena Heights. I think those are all private institutions. That's where this award would be able to be used. Maximum award on that this year is $3,000. So I anticipate the same for next year. Another award that I want to talk about really quick is the TIP Tuition Incentive Program. And again, this is from the state of Michigan. If you are a family and if you know that you qualify for the TIP award, I strongly, strongly encourage your son or daughter to start their college education at a 2-year institution. And the reason is because TIP covers the cost of your classes at for an associate's degree at a 2-year institution. It's fully covered. So the student would have no expense, no bill at that at a 2-year institution if they qualify for TIP. I do have the requirements out here. Mostly it's like if they were a Medicaid recipient for 24 months within a 3-year time period between the age of 9 and high school completion, you will get notified by Department of Health and Human Services if you qualify for TIP. I have had students come to Eastern that qualify for TIP. You cannot use TIP at a 4-year institution until you are considered a junior. And then at that point, it's only $500 a semester. So you're really not using the award to its full extent if you are a TIP recipient and you start at a 4-year institution. So just something to look into. I would strongly encourage to use that award to its fullest benefit if you are a TIP recipient. 2 new programs this year really quickly for future educators. There's a fellowship program and a stipend program. These programs, I just wanted to put them out here, but you can't qualify for the fellowship until you're a junior. So I'm not going to go into details on that, but it is something that's out there. And then students qualify for the stipend program when they're student teaching. So again, they're like senior, and that's when they qualify for that stipend program. Other programs that are out there, fostering futures. So those students that have been that are in the foster youth program or system. There are some programs out there. Future for Frontliners. This is new a couple years ago. I'm sorry, I can't remember all of the details of that. Go to the michigan.gov/mystudentaid to find out more information. Usually freshmen are not eligible for Frontliners. The Gear Up Award, some freshmen are eligible for that. And then police officer and firefighters, fire and tuition of children of veterans tuition grant. So at the bottom of this page, I have my email address and my name that feel free to write down. Feel free to email me with any questions. If I didn't explain something, or if I need to explain it better, please let me know. Michigan.gov My Student Aid is where you can go for all of the Michigan programs. And then the studentaid.gov is with the federal programs. And I kind of have it listed out there what tabs you should follow for those. That was a lot of information in not a lot of time, but I know it's probably been forever. So again, I encourage any questions, please reach out to one of us and we will be happy to help. Was there anything else that I needed to answer, Steph?
One more person sent something through that their student had done their account at studentaid.gov, but they don't recall if they invited a parent. Can he go back and do that?
You can't do that just yet. The only way you can do that is when the FAFSA comes out. So when the FAFSA comes out, that's when the student will invite the parent to fill out their portion of the FAFSA. So you as a parent can go out to the studentaid.gov website right now and create a studentaid.gov account. And that's what you will use when it comes time to sign the FAFSA. You're going to use that credential to sign the FAFSA. So I hope that clarifies. I hope that answers your question. Yeah, no student is able to invite anyone right now because the FAFSA is not open for the 23-24. Wait, 22, wait, is it 23-24? I'm getting my years mixed up.
24-25.
24-25. I'm sorry, guys. This has been very stressful for financial aid offices because the FAFSA is usually out on October 1st. We send notifications out usually in December, January about what you as a family can expect in financial aid. And this has all been delayed for us because the FAFSA isn't out yet. Next year, we do hope that the FAFSA will be available on October 1st. So, you know, we'll be back on that timeline of October 1st. And again, you do have to do the FAFSA every year. Sorry, I didn't mention that. Gosh, I see this chat box now just like blowing up.
It was me responding. You're fine.
Oh, okay. Okay.
I was
All
just
right.
letting everybody know that probably tomorrow I will send everyone who was registered for this event the YouTube link for the video of the presentation, which I apologize because I started 2 slides too late. And then we will also be sending a quick, I believe there's 7-question survey about the presentation, if you guys would be willing to fill that out just to give us some feedback. So that's all that was in the chat.
Yes. Okay. And so if there's not anything else, and again, if you guys do have questions, please go ahead and email them to me. If it's about, you know, the federal, actually anything, you can email me anything. And if I can't help you, I'll direct you to someone who can. But you can always use me as a resource. So all right.
I
Are
think
we
we're
good,
good.
Steph?
Yeah. If anybody else has any questions, I put both our emails in the chat as well. You will be receiving an email from my email, which is shamlin@loccreditunion.com tomorrow with that video link. But as Stephanie said, if you guys have any questions related to the private loan sector or to everything that Stephanie covered, please feel free to reach out to us at any time. And
Okay.
everybody else have a great night.
Yeah. Thanks for joining us. Sorry we ran late.
Yes. Sorry for that. Lots of information.
All right. All right.
All
Good
right.
night.
Good night, everyone.